Great. We might thank you, Melanie, for that. We'll go now to venues Ōtautahi. So, do you want to come up to the table? And I know we've got Gil. Hi, Gil. We've got you on Zoom. Oh, you might be on mute there, I think, Gil.
Thank you, Sam, and my apologies to all of you for not being in the room with you. I've sort of got myself back to back with Zoom meetings today. But thank you very much for the time, and just like to introduce Caroline and Dale, who will go through the presentation with you. I think Caroline's going to lead that and probably do that, but thank you very much for the opportunity to present this to you.
Great, thank you. Take it away. And just noting, obviously, Kelly and Tim are conflicted on this one. Great. Thank you. Go for it.
Lovely. Thank you. Well, nice to see you all again. And thanks for the opportunity to take you through our FY 24-26 draft statement of intent. So look, just a bit of an overview. Look, we're really clear about who we are, what's important to us and where we're heading. And I think that hopefully translates well into our statement of intent. This year's version is an evolution of, as it should be, of recent years' statements of intent post our transition out of council back in 2019. It reflects our layer of expectation and also aligns with the principles of council's framework. And just to highlight a few aspects where we really reflect our engagement in, but also our aspirations for te kaha, social, environmental and business sustainability, growth and diversification, health, safety and wellbeing, accessibility and inclusivity, local and ethical sourcing, cultural connection and embracing our heritage, the attraction of major sporting, entertainment and business events, and obviously our continued strength, trust and collaboration with council. Just to really reiterate our purpose, and this is actually something that is under review. We reset our strategy back in the throes of COVID actually, and we want to make sure that it is reflective of our aspirations for the future. So that is something that you may see changes a little when we get to our final statement of intent. But essentially we're here to strategically manage and leverage the venues to deliver positive social, cultural and economic benefit to the region. The venues are owned by the community, they're there for the community, and that really is at the core of everything that we do. Our way of doing business is to be bold, be agile, be humble and be kind. And I think that we stay true to that in everything that we do, and that's something that we will continue to focus on. You already know well and truly what we do, but we're here to plan, attract and deliver events. We deliver retail and corporate culinary and guest experience. We're about growth and diversification of the business, strategic and operational asset management and maintenance, and obviously our community and strategic local partnership and engagement. So in developing the statement of intent, albeit COVID-19 is well and truly, shall we say, behind us, it's important that we reflect on it because it does make up a lot of where we've come from, but also where we're heading. We've learned a lot through the challenges that it has presented, and that has really stood us in good stead for the future. Just to recap, obviously 70% of the 3 years prior to FY 22 and 23, we were really unable to operate. But we're out of it now. We've had 12 months now of really good trading, and albeit we've got challenges and always will in our midst with a pretty volatile economic climate, we're really confident and optimistic for the future. But we've learnt the benefits of a variable cost model. We've learnt to be agile and resilient, and we've learnt a lot about the benefits of looking to grow and diversify and de-risk the business. Health, safety and wellbeing obviously is paramount. We've taken the opportunity in FY 22-23 to really do a comprehensive overhaul of our health and safety management system, and we have implemented all of the recommendations that have come from that independent review. So really looking forward across the period of the statement of intent is around continuing that momentum, focusing on critical risk, and looking to continuously improve in that space. Te kaha, a big part of our future. It's obviously at the latter end of the SOI, but not too far away. We're into the counting the months now. I think 36 is about it. So obviously for Te Kaha, our role as the venue operator is to ensure that the design reflects those strategic design fundamentals. And really from now on, and we have already commenced this, is to develop and activate the commercial strategy for the venue. And that really has started in earnest. It's also really important that the community engages and connects with the new venue, and that is a role that we will take on. And that again starts now. We really need to start telling the story of what the venue will be like when it's here and the genuine benefit that it's going to deliver. Embracing our heritage, we've learnt a lot actually through the design process of Te Kaha and what we can learn and take into the venues, Ōtautahi venues in our business. And that is something that we will continue to develop and strengthen over the course of our statement of intent. Sustainability. Now, obviously, environmental sustainability is paramount, and we're in an industry which can be challenging at times with large volumes of people and waste, etc. But we want to look more broadly than just environmental sustainability. So thinking about social sustainability and business sustainability. So we have engaged with a partner in 22-23 to help us develop our roadmap and strategy for environmental sustainability. And that will be complete within the next couple of months. And then we'll look to implement that over the course of this SOI. And we'll report back on the reduction in our carbon footprint particularly. But who we are is around social sustainability as well. So how we can support the local community. So continuing to source locally, source ethically, employ a strong and large group of local workforce, continue to pay the living wage, and continue to attract those events that drive economic benefit to the region. And business sustainability, we need to be sustainable for the future. And again, what we've learnt about the last few years is where we can de-risk and continue to find ways to drive commercial returns, the better off we will be as a collective. But in doing that, we want to be transparent and we want to continue to have the community good at our core. So business sustainability includes our ambition to be a B Corp venue, a B Corp business, which would make us the only B Corp venue in the country, which is an aspiration that we wholeheartedly want to seek to achieve. Accessibility and inclusivity, again, we've learnt a lot through the course of designing, supporting the design process of the new stadium, Te Kaha. So enabling the same experience for all members of the community at VO venues is a strategic priority. And that's something that we're working really hard to make sure that is reflected. So we're physically assessing all of the venues to make sure that from an accessibility and inclusivity perspective that we are there meeting those needs. And we want to learn and engage from the community. We can't answer all the questions on our own. Asset management, obviously a core part of our business. It's the thing that is the foundation for being able to deliver what the business does. So taking care of the community's venues is a key pillar. They need to be safe, they need to be compliant, and they need to be operationally functional. We need to ensure sustainable and maximise shareholder value throughout the course of the life of those assets. And just to highlight, and again you'll see it when it comes to our capital funding, the arena particularly is 25 years old and is in a period of significant renewal. So looking forward, economic benefit. So we have two aspects of economic benefit that we consider. So one is the direct contribution from local procurement that you can see growing year on year throughout the course of the statement of intent. And as we continue to broaden that focus outside of food alone, we will see that grow. Naturally we will choose local providers, but it's actually making that a more formalised reporting back to council as well. And then that estimated benefit of events particularly, you'll see that growing year on year. This year we're looking at an estimated over 30 million into the local economy from events in the venues, and obviously that continuing to grow year on year. And we always like to include the prior to 2020. There'll be a time that that will seem like an age ago, but you'll see our targets around local procurement remain. around that 80%. And, you know, this year we're obviously achieving that. We're ahead actually, our target was 75, so we're closer to 80. And you'll see that prior to 2020 that only 5% was from the local Canterbury region. So that's something we're really proud of and something we'll continue to focus on. And the number of guests in our venues. Now you'll see that might be an outlier in terms of this year. So this year we were forecasting around 400,000 guests to come through the venues. That's looking more likely to be 600,000. We forecast originally about 305 events and we'll deliver 396. Now, when we developed our budget, that was you know, just coming out of COVID, so we needed to be a little more conservative, and I think it was the right thing to do. But again, we've maintained a little conservatism. We are looking at a fairly global, a fairly volatile environment, so we want to make sure that we are continuing to grow, but we do need to be realistic that things might come under a little bit more pressure. We'll obviously still continue to focus on delivering those community events, those ones that attract a slightly discounted venue rental. And our target there for each year of the SOI is 45, which is around 110,000 in value per annum. Look, and again, growth and diversification. We've talked about it a little bit, but what does it actually mean? We're thinking about how we can de-risk the business, how we can think about things outside of the venue portfolio. Sale GP is a wonderful example. How we can take venues, Ōtautahi, culinary and event services outside of the venues and support even council events, some of the larger events in the city, even some of the larger events in the region. So that's something we're scoping up at the minute to see what that looks like, and then as it starts to turn into something a little more real and outside of one or two events here and there, we'll certainly look to see where we can develop some targets there. Some other opportunities that we're looking at is how we can create our own venues Ōtautahi events. So I'm sure all of you will be coming along to the midwinter session at the Christchurch Arena in July, but that is a venues Ōtautahi created event that will celebrate all things wonderful about Ōtautahi Christchurch. It will include local food and beverage, local artists and local performers, and it's going to be a really cool new event for the city and one that we want to grow year on year, and imagining that at Te Kaha in that first year of opening. It'll be pretty special. So in terms of compensation sought, it's a relatively complex period across this statement of intent. Obviously we have the extended operation of the temporary stadium through to April 2026. We are seeing increased fixed costs associated with managing the assets. If you think about asset management and maintenance costs for FY 22-23, they're around 4.5 million, and for next year they're looking more like 5.4 million. So alone insurance is an increase of around 20%. So we are seeing things that are genuinely making a material difference to our forecast. We're also looking at, so we have pre-opening costs associated with Te Kaha, so, and we'll go into a little bit more detail around what they are made up of, but essentially we will be funding that through this financial year and next financial year through our own operating cash flows. We're also seeing obviously the increased local competition that's been around for a little bit now, but we have to still be mindful of that and that recovery, long tail of recovery from COVID-19 as we rebuild the business. And you'll also see, and we'll talk about it again in a couple of slides, the reduction in debt funding. So our operational grant goes from 4 million to essentially 3 million across from this year through next year, and then we'll be nil from debt funding from 24-25. So what compensation sought in this statement of intent doesn't consider is Te Kaha operational and capital. So that will be worked through in the long-term plan, as well as any discussion and around bid incentive allocation and administration. And just to touch on the financial performance targets, the this graph here and splitting the GL, really the purpose of that is to highlight the offset from our operational side of the business to the asset management and maintenance costs. So next financial year, the council funding contributes 57% to the asset management and maintenance costs, and that remaining 43% is offset by the operational side of the business. So really highlighting the benefit of continuing to drive where we can those commercial returns to continue to be able to offset that number. And from a consolidated perspective, you'll see there on the second line that operating grant reducing. It's obviously 4.05 million this year, going to 3.25 and then to 3.05 from 24-25. And you'll also see the pre-opening expenses there across those 3 financial years, and that coming in 24-25, and that'll be a reimbursement of what's been incurred to date. And you'll see there that we are looking at some EBITDA deficits. Now, that's really reflective of the inflationary environment and those increased costs, the reduced debt funding, and the Te Kaha pre-opening costs, which are as per the Te Kaha investment case. And I won't go into this in too much detail, but just to give you an idea of what those Te Kaha pre-opening costs are made up of, because we still are 3 years out. But essentially the commercial strategy is one that we need to and already have started work in earnest on. So phase 1 of that is identifying and valuing all of the commercial assets. So that's things like naming rights and sponsorship and corporate hospitality, etc. And then from mid this year, we'll be executing that sales strategy. And that includes things like marketing collateral, etc. You know, these are highly valuable assets, and they will underpin the commercial outcomes for Te Kaha. So we really have to take the time to get that right. Closer to the time, there'll obviously be some increased resourcing, but again, Te Kaha will come online as part of the venue's Ōtautahi portfolio. So it's not about creating a whole new structure to deliver. It is about adding that venue to our already portfolio approach to managing the venues. And asset management, again, this is the asset management and the capital expenditure is as per the 21-31 long-term plan and as per our asset management plan. It is predominantly focused on the arena, as we've talked about. You know, it has had a period of 25 years working hard, and you'll see some of those bigger ticket items, things like the final stage of the roof strengthening project that has, that's been going now for around 9 years. But obviously the roof strengthening has to fit in with the operation of the venue itself, so it's been done intermittently over the time. Replacing all the retractable seating, replacing what is currently a diesel fuel source at the arena, that obviously is part of our sustainability strategy as well, and in light of that, also replacing the building management system. And just in summary on our finances, so again, our capital and operational funding is aligned with the 21-31 LTP, with the exception of that debt funding coming down. Our capital funding is solely prioritised to the delivery of our asset management plan, and our operational funding solely prioritised to the management of the assets, management and maintenance of the assets. This SOI does reflect the ongoing operation of the temporary stadium, which is another, I think from the last SOI, maybe another 12 months, and those other higher costs. And as we've got a period of time between the draft and the final. February is quite early to develop our budget, so you will expect to see a few tweaks in the final. A couple of those will relate to our operational performance targets. What we want to make sure is that they are very, very clearly measurable, very clearly auditable, and very clearly outcome focused. And so that's just something we are working on at the minute to make sure that those performance targets are really, really clear. What you may see is them streamline a little, but the more detailed reporting will remain on our quarterly performance reporting into council. We will add a little more commentary around growth and diversification as some of those opportunities have started to form up a little more clearly. And in terms of our financial performance targets, there are a couple of things that have come to light over the last month or so as we've gone from a draft budget as we'll head into a final, including that 10% increase to the living wage. So we need to consider how that is built into our model, as well as how we can recoup some of those costs as well. And we do have a $118,000 error in those Te Kaha pre-openings that we'll write. It's just in that last financial year. And they'll align that number with the LTP. And that brings us to the end. So open to any questions. Thank you.
Very good. Thank you for that detailed presentation. I had a couple, but you've answered them all, which is fantastic.
That is a delight.
Does anyone have any? So Aaron and then Yanni.
Yeah, I've got some. They're all pretty short, basic questions. One is around, do we have so they're all going to be revenue-based ones. Do we have a target of how much money we try and take off each guest that comes to each venue?
So, look, every event is different.
Yeah.
So what we do is we tend to forecast a spend per head.
Yeah.
And as I say, they do all tend to differ depending on the demographic.
And do we look at what other stadia and venues around the world do, and we're trying to equal that, beat that, not beat it, and how we're looking?
We'll always try to beat it. And what we're trying to do really...
Some of them overseas are pretty big.
I know. Well, and I mean, what we need to do is think about, and this is what we're trying to do across all of the venues, is think about how we can encourage our guests to come along earlier, stay a little bit longer. Right. And if you think about the town hall, for example, we have just invested in some new furniture to create more dwell spaces. Right. And we'll start marketing different menus, and actually start to drive a bit more time and think about the venue experience versus just the event experience. Right.
And then my next question would be, because I realise you're a cashless venue, have you surveyed the visitors to see whether they like that or not?
No, but we can.
Yeah, that would be interesting to see the feedbacks. They might be happy. This one's not, but everyone's different. I'd rather give my kids cash than a card. And then of course there's the fees involved, especially if you've got pay wave. Like you lose truckloads of money. Like a real $50 note still has a value of $50 after being used 1,000 times. Cashless transactions don't. It disappears all to the bank. And then the other one is, do we have a target time that people get served when they're at venues?
Yeah.
And is that met?
Look, we have a target time. We don't.
Because that gets you more money off people.
Yeah, absolutely. The shorter the transaction time, the more transaction you can have, but also the more time you can spend enjoying the event. So we're doing a lot to invest in how we streamline all of our processes. That's why we've invested in click and collect. Yep. So it means that you can actually order, just go and pick up, so you're not actually queuing at all. And that forecast, when we invested in that technology, is about a 30% increase in spend per head. So all of those things that we can do to enhance and create speed when it comes to transactions, we're doing. Yeah,
and then finally, the last one is, I've noticed on some of the venues, they're parks, but not Spurry Farm, Six Flags and things are doing, Universal does as well, not Disney, that they have unlimited food and beverage passes for a day, or pre-purchase a meal or a second meal with your ticket, and then, which seems to create quite a fast system, or the refill drinks where you don't want the replacement throwaways. But
Aaron, I just wonder,
right.
No, I'm not cutting you off. What I'm wondering is actually whether if you could take an action to maybe arrange a time to, because Aaron knows this stuff inside out and could share some of those ideas, because I largely agree with them. So can you please jack that up?
Yeah, absolutely.
Yeah, I think that'd be really, really useful. Okay.
Let's do that. That'd be good.
Next up is Yanni and then Tyrone.
Two questions. Thank you for the work that you do. One was, are we able to get a sense of, through the statement of intent, the performance of each of the venues? Because I can see the kind of overall, the 450,000 target, but what I can't see is how each of the venues is performing, both financially and number of people.
We have included in the quarterly report now the breakdown of those events per per venue that are held. So
Okay.
that's something that we've included in that report now to
Will
provide
that
some more
include the
visibility.
financial information as well?
We don't currently break that down, but that's something that we could consider, and there's a business plan.
I mean, I think
session.
it's helpful knowing some of the history of VBAs and where we got into some problems in the past, that it would be good for us at a governance level to have an understanding of how each of the venues are working and what sort of level of cross-subsidisation is occurring. And then the second question was,
Just on that one, maybe if you could just note that as a discussion to have with your board, because you've obviously got 2 councillors on there as well.
Yeah, we'll do that. We've also got a session with council around our business plan in more detail, so
Right.
we can talk about whether because we do tend to. I mean, that's the benefit of Venues Ōtautahi managing a portfolio is that some of the unders and overs can be managed because all of the venues are different, but if it, we just need to think about what's the right thing to be able to report to give you that assurance that.
Yep.
Yeah.
and then the second question was just in regards to the whole sort of financial raising revenue. I'm surprised that we don't have a stadium levy or a venue levy, and I know Eden Park has one. I note that Spark Arena has one. You know, if people are being charged sort of $8 a transaction to get a ticket or a $5 handling fee over the phone, it seems odd to me that we wouldn't have any sort of ticket levy to go to both the ongoing operational and future needs of our venues. So have you thought about how we could actually introduce a levy to pay for the financial challenges that you've outlined? And if so, what's the thinking? And if not, how could we get you to do that?
It's slightly more complex in terms of levies within tickets. We do have a heritage levy at the town hall, and that's something we've introduced in the last financial year. So that's something that will support the ongoing asset management and maintenance for the town hall particularly. But there are some challenges with that, with making sure that the ticket prices are still attractive, and also it's attractive for promoters to bring events here. So there's a little bit of a balance, but we've just got to think about. I understand what other ways can we look to reduce any other reliance on council for support for the management and maintenance of the venues, ticket levy being one. So it's something that we can certainly look at in more detail for the other.
No, that's really useful. Thank you.
Yeah.
That's great. Okay, I think we're Tyrone. Sorry.
Just really quickly,
And then-
I mean, talking about like celebrating and sourcing things locally and good stuff like that, and environmental sustainability and social blah blah blah. To what level, social blah blah blah? That's a technical term. Of the left. Yeah. I'm allowed. I've earned my stripes. Sorry. Anyway, so I'll get to my point, which is that, like, to what level? Like, let's say, for example, like at Hagley Oval, where there's like, if the Black Caps play and they've got like massive corporate sponsorship behind them. How much leverage do we have in those conversations now going forward? Because in the past, it looks like, to me, from an outsider's perspective, it looks like we've been kind of generally overridden. Do we have more clout in that regard, sort of in future years?
So national sporting bodies, no. We, All Black sponsorship, New Zealand cricket sponsorship, that's really their choice. Where we have more influence, and it's more around partnership, as in more of the local sporting bodies, it is ultimately their choice. But it comes down to also the venues themselves. So with the town hall and the arena particularly, we own those venues. We don't have a pourage, so we can choose what we pour in those venues and what food and what beverage we can supply. The stadium is slightly different under the terms of the agreement, but those things can change in the future. Yeah.
So basically, the All Blacks and New Zealand cricket have all the hand in that relationship, essentially. It's unfortunate, but it is what it is.
Yeah.
That's right.
Okay, I think we're there. So, sorry, Pauline.
Yeah, just a really quick one, and you have alluded to it, but I thought I'd raise it anyway. So, the opportunity for VO to support the local music sector, how much of a focus do you put on your ability to do that? And I know you've mentioned the event mid-year, and it's going to have a lot of all local music, I've sort of gathered.
Yep.
So how much of a kind of a lens do you put on that, and how are you able to do that?
Yeah, so look, this is our first foray into creating something that is an opportunity to actually provide that stage for local artists. Really, how we do it at the minute is around those community discounted events at the town hall, etc. But it is something we want to do more of, and I think it's how we actually understand where we can meet the need without trying to do it before we have that discussion with local artists and community groups. So I think that's something we need to work on in the next sort of 12 months or so, is how we engage more broadly and then actually translate that into something real.
Yes, because we've had representatives in here seeking our support, so if we can feed that onto you, and also CNZ are going to put a bit of a lens on it as well, so if we all work together we should be able to come up with something. Thank you.
Yeah.
Look, these are all very, very valid comments, but we've got to be very careful. And the midwinter one is a good example. Where we promote the event, design the event and own the event, we take the risk. So we've got to be very mindful of that we don't put the council in a situation where they've taken a big loss, or we've taken a big loss, which ultimately affects the council, taking a big loss on an event that just doesn't attract, good patronage.
Don't want
We
to
just have
flop.
to be really careful about that. We've got to evaluate that very carefully.
Excellent, thank you. Thank you all for that. That's been really, really useful. So I'm happy to move that. Pauline's happy to second it. Is there any discussion? All in favour? Yanni?
Just wanted to acknowledge the good work that Venues Ōtautahi is doing, and that local sustainability and using local producers, I think, is just so amazing. Such a good story for the company and the organisation and as a region. But I do really strongly support the idea of looking at a ticket levy. I have raised this in the past. If we'd had one in place for 10 years, we would have had about $25 million extra to come in to actually fund some of the new developments that many cities around the world and regions do this when they're building new infrastructure or paying for existing infrastructure. And I think we need to look at those financial levers so that we don't just put all the costs onto local people who may not even attend some of these venues to cover the costs for those that are. And if you think that ticketing companies can make so much profit off each ticket that's sold, it does seem inherently unfair that we wouldn't be putting a small levy on to pay for the costs that we're incurring otherwise onto our ratepayers for those who are using our venues. So acknowledge that staff have said that they will look at that. I think it's really important. The sooner we get it in place, the bigger the benefits will be of having such a thing.
Great. All in favour? All in favour? Against? That's carried. Thank you. Thank you very much. Thanks, Gil, for zooming in.
Thanks, Sam. Thank you all.